Well, Australia's housing market certainly at a crossroads at the moment, given what we've seen in terms of rising interest rates and, of course, tax changes. Let's catch up with Anthony Landahl from Equilibria Finance. Anthony, welcome back to you. And we've heard some really interesting commentary over the past few days from the big banks. CBA yesterday, ANZ today, Westpac at the beginning of the week. The headlines being just how far those mortgage application numbers have dropped.
Yeah, most of the bank, or a lot of the banks have now come out talking about applications dropping some 20 to 30%. Before I came here this morning, I was at a briefing with a well-known second-tier bank. They're down 36%. And interestingly, it's not all investors out of the market. Their investor splits are down around about 40-odd%, but they're also down on owner-occupiers, some 20%. So I think across the board, as you said, ANZ, CBA and Westpac have come out. They're all down 20 to 30% on applications.
Well, certainly investors you could explain away as to, given those significant changes, particularly in terms of tax treatment, courtesy of the budget. Owner-occupiers, I mean, that's a significant number. Why are they staying out of the market at this point?
Yeah, I think there's a couple of reasons. There's a lot of caution at the moment outside of the tax changes with investors. There's a lot of caution from first home buyers around affordability is still a massive issue. Notwithstanding some of the benefits that first home buyers get, there's still realities around can they afford to buy where they want to live. Some investor activity is shifting to where first home buyers do often buy, which is house and land packages. There's also a bit of uncertainty generally in the economy that I think is creating a lot of caution. There's limited supply, we're seeing a drop in market values. So I think there's just a cautious approach across the market at the moment, which is slowing the market down, not only across investors, but into the home buyers as well.
Anthony, given what you heard from Michelle Bullock post the decision to leave rates on hold on Tuesday, what did you get out of that as to whether you feel as though perhaps they've reached the peak as far as hiking is concerned, and potentially what that could do for market sentiment?
Yeah, look, I think firstly the main concern Michelle Bullock had was around about productivity in the economy, and that was a point very strongly made. She was less bullish around rate rises, but the RBA was very, very clear they're still concerned about inflation. They recalibrated some of their forward forecasts, but I think she made no doubt that if some of those forward forecasts were hit, that they would see another rate rise. The markets variously have factored in probably one more rate rise. Now that may be down the track. There might be a lag effect a little bit with fuel prices, construction costs are on the rise. My instinct is there'll be another rate rise, to be honest with you, and they probably need another rate rise as much as we don't want one for a mortgage holder. Just with inflation, government spending's at 3.1%, which is actually above the RBA's target range. So we got government spending out of control. We got fuel prices being impacted by geopolitical events overseas. We got construction costs rising. So yes, house prices are falling. Rents are going up. So it's a challenging environment, and I think we might see another rate rise, maybe around November.
On top of that, of course, as I mentioned there, those changes to tax, in particular capital gains tax and negative gearing. Now, I mean, the government's saying, look, these changes were needed, obviously, just in terms of encouraging or making houses more affordable, but also encouraging more housing to be built. Is that the way it's panning out as you see it?
It's a tricky one to read right now. There's no doubt that the changes have literally stopped investors in their tracks.
But are they, I mean, because they still get that advantage if they build.
They still get the advantage on a new build, yes. And the truth is not all properties were negatively geared either. But what investors are looking for now is different. They're looking for higher yielding properties because on the way out the capital gains tax is obviously impacted. So they're much more looking at their after-tax dollars. So investors are quite cautious. Investors with existing property are not selling. So that's impacting liquidity in the market. And we're also getting a situation where home buyers are quite cautious. So we're seeing drops in the market. Perth, Brisbane are now falling. Sydney and Melbourne are recording negative growth at the moment. So most are forecasting 5 to 10% annualised from peak to trough fall in growth. Is that bringing home buyers back in the market? I think it's creating opportunities for home buyers because the market has slowed. But I think there's a lot of unintended consequences around investors are holding stock. And there's not new investment stock coming, so there's a massive issue looming for renters. We're already seeing low vacancy rates. We're already seeing rents rising. Investors in the market are looking for higher yielding properties now because their strategy has changed. So I don't think the full consequence of the tax changes have played out yet, but the market is falling, and I think we're going to see a few more months of pretty slow activity in the market.
And Anthony, you don't deal just with residential and investor loans, it's also businesses as well. What are you seeing on that front?
Yeah, businesses. A lot of business credit activity is quite strong. A lot of businesses have been looking at working capital facilities, but we are seeing businesses now looking at term loans, growth strategies, buying premises. We're also looking at business owners with self-managed super funds looking at premises as well as an investment option. So commercial credit's quite strong. A lot of business owners haven't passed through to the consumer yet some of the costs, so businesses have been absorbing a lot of the costs increases that have come into their business. So there could be a lag there on some inflationary forces as well.